Shares plunge amid market panic. Let's have a look. Hello everyone, Florian Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee, and I thought we'd have a look at a few articles from news.com regarding the share market plunge. Before we have a look at this piece written by James Hall, let's just jump over to trading economics. And we can see here Australian shares fell almost 6% in early trading. That was yesterday. We'll have to see how it goes today. But the big news was the Dow Jones. Have a look at that plunge. And the Nasdaq. Down. Everything is down, guys. There were trading halts. 15 minutes to calm people down because it was panic selling. Panic selling. The market is just plunging like a rock. And there's one thing that with all of this you need to be aware of, and a serious thing. There will be people, friends and family that you may know that may be suffering a significant financial loss here, and that can cause a lot of serious stressful issues, emotional issues. It can make people consider irrational methods for dealing with it. And this is when you need to reach out and be there as a support to your friends and family. Not smugly go, I told you so if you happen to prepare, but be there for people that need it. Because in the end, it's only money. It's not the end of the world. You can always make it back again. That's what some people have to, might have to realize. And I'm sure most people have stories. The older you get, it's not a, just look at the graph here. It's not a smooth ride all the way up. You'll make money, you'll lose money, you make a good investment, you make a bad investment. It's part of life sometimes. And some people have to realize that it's not the end of everything if they've gotten hammered. And that's a takeaway, guys. So if you know someone that's going through this particularly now, reach out to them, have a beer with your mates when you can, and let them know it's all going to be fine one way or another. Because we've all been in a situation where we've had, big losses. I think the worst for us was we had a big contract, for our business, and for that a big contract is $500,000, and we had a few boys on board, and they kept delaying it, and so I kept the whole team on over for 3 months longer than I should have. I invested in extra infrastructure, getting tooling up for this one big job, and you know what happened? They sold the building and the project disappeared. So that was after investing a lot of money, keeping people on longer than I probably should have. That was a bit of a sting. That definitely was a bit of a sting. And you need to, become quite stoic and learn to overcome it. But there's always a brighter side to it. I think particularly for men, it can be more of an issue. We tend to identify more, I'd say, with our career achievements, our material possessions, and our wealth. It's just how a lot of men are hardwired. And no matter how much soy you drink, that's still, I'd say, still a fundamental part about masculinity. Correct me if I'm wrong, guys, but most of you can relate. So if you've got a friend that's copped a beating, reach out to them, guys. Okay? Because there are going to be some people that are hurting pretty bad here. So let's have a look at this article by James Hall. So the ASX plunges as investors warn Scott Morrison's stimulus package won't stop the bleeding. And there's going to be, Morrison is presenting on this later today. I mentioned it yesterday that they were considering free money for everyone. I mean, this is just showing us how little impact the government can have in a situation like this. It's more emotion now. It's panic that's driving it. A day after 140 billion was wiped from Aussie shares, investors say another historic plunge is all but certain as stocks fall at the open. Australian shares are in for another day in the grips of toxic panic selling as the local market tumbled at the open of trade. The ASX 200 was 2.8% lower soon after the bell rang, with analysts warning the capitulation is a perfect storm. Well, it seems to be, doesn't it? The fears of an oil price war between Saudi Arabia and Russia have compounded an international economy already crippled by the illness outbreak. The ASX recorded its worst day since the GFC on Monday, as it fell 7.3% lower and slashed 140 billion. And all the futures index suggest the death spiral will continue throughout the day. I mean, I had a short that just, it was interesting. I had to ring up to close the position because it had fallen, and then it automatically closed when the day opened. So there you go. I mean, how many of you are shorting the market, guys? Some viewers are telling me how they're shorting banks, they're shorting everything, pretty much, travel businesses, mining businesses. Overnight, not financial advice, guys. Don't take it from an architect. Well, no, the only advice you take from an architect is don't invest in an architectural business. I think there's one of the few actually listed architectural practices in Australia. When I saw how much they were making in revenue per staff, it was just pathetic. Overnight, the Dow Jones was forced to trigger an emergency halt of trading when it plunged 7%, a mechanism designed to prevent panic selling not needed since 97. More than 440 billion has now been lost from the local market since it hit a record high of 7,289 points on February 20. Today's fall will see it enter into a bear market, a definition of an index that has fallen 20% or more from its peak to trough. IG market analyst Kyle Roeder said all indicators point to another day of historic pain inflicted on Aussie stocks. And we'll jump over here, and I have the S&P ASX 200, and I'll just change to a 4-hour chart, and you can see there we're trending, not doing too well, we're trending down. We'll go 1 hour, let's see how it's going. Yeah, we're 5,738. So it's looks like it's not going too well this morning. We'll have to see, guys. It means the market is showing definite signs of capitulation, and if you look across global markets, there's just a sense of pure panic, he told news.com.au. We jump here, let's have a look at everyone's favorite hedge, to gold and silver. Gold is, well, 1665, so it's gone off a little bit. Let's go to the hourly chart. You can see here. So what is it? What type of pattern is this when it just bumps up and down? It's kind of holding, isn't it? It's holding, ready to move. And silver, how's silver doing? The poor man's gold. People have taken a bit of profit since it hit 1870. It seems to be holding here between 17 and 1675. So we'll have to see. We'll have to see if people plow into this. And one thing we'll look at is just the bonds. How are they going? I mean, there you go. Oh wait, that's not bonds. Over here, we'll look at US bonds. There you go, 10-year notes, guys. There's no real greater certainty about the future, and markets are being controlled by fear. We're seeing investors shoot from the hip first and ask questions later because it's too costly to take the risk of holding riskier assets. The Aussie dollar was buying 65.97 US cents at 10:15 Australian Eastern Time on Tuesday, up from 65.46. And I am just looking over to this screen here. What is it now? 65.96. And the concern with the Aussie dollar, guys, is if we jump here to the Observatory of Economic Complexity, it makes our quarry materials that we export out of this country. And I'm jumping on calling Australia a quarry because, after what Katter said on Sky News when he was showing off his gold, we're not really value adding to the dirt we're digging up. We're selling the raw materials. If we were really a mining country, we'd be selling the metals. Anyway, it'll make these more appealing to the world, but the demand for them is going to crash because of a slowdown in the global economy, and it'll make everything we import more expensive. Everything we import more expensive. And that will have cost of living implications. Just imagine, apparently there was an auctioneer, a real estate auctioneer, sold a roll of toilet paper for $1,000. I think it was, I'm not sure what it was. But if anything, that just tells you the skill of these charlatans in real estate. How much will toilet paper go up? Will that seem like a good buy soon if the dollar falls more? Before the trading bell was rung on Monday morning, crude oil prices spiraled up to 30% lower after Saudi Arabia slashed its export oil prices and stoked fears of a destructive price war with China. And since then, the trading channels have been further hampered as Italy announced a lockdown of the entire country to control the spread of the deadly outbreak. At the moment, everything that could go wrong is going wrong, Mr. Rota said. We're seeing massive macroeconomic headwinds emerging from the illness, and the fundamental landscape shifted yesterday with what happened in oil markets. Growth was already looking like it was going to take a pretty considerable hit globally because of the illness outbreak, and now we're seeing financial conditions deteriorating significantly because of what is looking like a prolonged price war. It's almost a perfect storm. Investors will be keeping a close eye on details of a stimulus package revealed this morning by Prime Minister Scott Morrison, but Mr. Rota said it won't stop the bottom of the market from falling out. Well, yeah, there's only so much 10 billion bucks can do. What do you think, guys? Are we going to get a cash rate cut? We're going to hit 2.5? Is QE going to kick in? What do you think the unemployment rate will look like next time it's measured? According to the Australian, pensioners, New Start recipients and small business owners are expected to be considered for the one-off cash payments as the government tries to protect jobs and inject more money into the economy. It's certainly not going to turn the tide in equities because we're trading more on global scenes, Mr. Rota told news.com.au. There's probably the argument to be made if you talk to someone in the market right now, rightly or wrongly, the government's been a little bit slow to respond with promises of financial stimulus. AMP chief economist Shane Oliver agreed, saying any respite offered from the government would be reserved for when the panic eventually dissipates. He told news.com, it was clear global markets were currently driven by fear and bad news is still dominating. Well, yeah. I mean, that's what we're seeing here, guys. We're seeing this will be remembered as Black Monday. I mean, this is going to be a Black Monday, guys. Look at this. Everything down. Dow Jones down 5.8. S&P 500 down 5.7. ASX 200 now down 8%. Guys, day on day. Let's go to 1 day. Oh, is it kicking up again? Is it a little bit? A little bit. We'll have to see. But this, yeah. The stimulus plan will help, as did last week's interest rate cut. They'll help soften the blow, but until we can get more confidence that the worst of the economic impact is in sight, the market remains at risk. I don't know how we're going to get that. I think these issues are just starting to bubble to the surface now. You'll have, a school closure, and that will create fear. That's the problem. It's probably not going to occur until the dust settles. The leading economic commentator stressed the importance for everyday investors to remember market fluctuations are normal. This isn't normal. This type of fall over 2 days is a 1 in 10 year event. If that. This, I would say, is just because we didn't sort the mess out at the GFC. And the housing bubble continued. Everything bubble continued. That's what we're seeing here. It's just a repeat of this, guys. There you go. Almost broke 7,000. We did this time, and boom, now we're going to go down. Will we hit down to GFC levels? Will it go down to $3,300? Or the index? This isn't normal. You can't claim that this is normal. This is ludicrous. I guess they're trying to address fears. But fluctuations like this aren't normal. No. History tells us that these things come along every so often. Well, not every 10 years. It's happening every 10 years now. This is just, I put money, this is a continuation of the GFC. What we've had there. All the mess that they've sorted. Throwing all the money at the banks to keep them going. But you get this horrible time in the share market and financial markets generally, and after a couple of months, volatility settles down and things start to recover again, Dr. Oliver said. Well, yeah, it will be a couple of months. It's just the way the market works. I guess the volatility is the price that investors pay for the high returns they get out of shares over the long run. But that doesn't mean that it isn't any less unnerving. And the oil price plunge. The dispute between oil producers resulted in oil prices plunging and could lead to a global economy already spooked by the deadly illness being awash in an oversupply of crude. Brent crude, the international standard, was more than 20% lower on Monday morning at $35 a barrel, recovering slightly from a low not seen since 2016. The benchmark US crude fell to $32 a barrel. Prices are falling as Saudi Arabia, Russia and other oil-producing countries argue how much to cut production in order to prop up prices. You gotta love these cartels, don't you? You gotta love these cartels. Demand for energy is falling as people cut back on travel around the world. The worry is that the new illness will slow economy sharply, meaning even less demand. So let's have a look at what the price of oil is now. Crude, 32.56, Brent, 35.97 on trading economics. What do you all think, guys? Where do you think it's going to head? I mean, look at that. How can anyone say that this is normal volatility? These little ups and downs are normal volatility. Looking at my gold chart, this is normal volatility, guys. Looking at silver, this is normal volatility. Not drastic, boom and down. This isn't normal. Or actually, even that may be a bit normal. But like that, is that normal? Is that normal? Let me know your thoughts and opinions in the comments below, guys. Please like, share, and subscribe to the channel. If you're a fan and you want to help us grow, there are a few ways you can. You can support the channel by joining us here on YouTube. Become a member, you get access to badges and emojis. You can support us via Patreon for a small monthly fee. You can also use our affiliate links at Amazon and eBay for your consumer purchases, and Independent Reserve and Kucoin for all the crypto traders out there. We sell merch from the HeiseSays website. Find the link in the pinned comment below. Pocket squares made by Rachel. And finally, we also have PayPal if you want to support us that way. Thank you all very much. Take care, guys, and watch the market. Bye for now.